Hello, and welcome to Chapter 1. I am Octavia Harris. Pre-Home Ownership Checklist, Chapter 1, Types of Loans. Grab a pen and paper, and let's go over some of the things that can help you decide if you are ready to buy a home. Let's begin with which type of loan you may be considering so that you can estimate your out-of-pocket expenses. Look over these different options and make the best educated guess on which one fits you better. It will help you be prepared when talking to a lender. These options will give you clarity on what loans are out there and what may be best for you. But at the end of the day, your lender is going to be the person who lets you know which lending options you have available. This is just going to give you some clarity on what's out there. The current minimum requirements for a conventional loan. A conventional loan is what most people typically know about. Down payment. There is a minimum down payment of 3% for conventional loans, and the money can come from your own money or a gift from your family members. Another expense that you want to consider is mortgage insurance. If you get a conventional loan and you put less than 20% down, it will require that you have private mortgage insurance. PMI, or private mortgage insurance, is used to protect the lender in the event that the loan gets defaulted. The cost for PMI can be anywhere between 0.15% and 2.5% of your loan amount each year, depending on the down payment and your credit score. The payment for this insurance will be paid every month as part of your monthly house payment. Some people will also opt to pay this premium up front at the time of closing, so that would be an out-of-pocket closing expense. Credit score. Right now, the minimum credit score requirement for a conventional loan is 620. The higher the score is, the more consideration you will get to have a lower interest rate offered to you by your lender. Employment. Lenders require a proof of steady income and may check multiple times during the process, specifically right before closing. They will look very closely at the last 2 years of your employment history and income. They will also ask you for additional paperwork to verify the income. Income limits. There are usually no income limits on a conventional loan. Debt to income ratio. Your debt to income ratio, or what is known as DTI, is how lenders measure your total debt. Then they divide it by your gross income. A conventional loan and conventional lenders prefer a debt to income ratio of 45% or less, but sometimes they do stretch it to 50% if you have a higher credit score or additional cash reserves. Borrowers who have a debt to income ratio above 45% may be required by the private mortgage insurers to have a minimum credit score of 740. Occupancy. When you use this type of loan, you can use it to purchase a primary residence, a home that you will live in, a second home, or what is known as a vacation home. And you can also purchase an investment property with it as well. You will see, however, that some loans do not allow the purchase of an investment property or a second home. Next, current minimum requirements for home ready or home possible loans. The next information is going to be information to remind you and let you know that there are agencies that can help homeowners purchase a home. There are even times when there are options that can be used more than once. So you can use a first-time loan more than one time if there is a space between the time the homes are purchased. This is why your first best step is to apply and talk to a lender who is going to get you where you need to be by helping you get there. A good lender should say yes or not now after you do X, Y, and Z. If you come across a lender who simply tells you no, not at this time, and doesn't provide you with the steps that you need to take, you may want to consider looking into another lender or reaching out to your real estate agent if I am your agent so that we can find you better options, because a lender should definitely help you along the path to letting you know what your next best steps are. These loan options come from Fannie Mae, Home Ready, or Freddie Mac Home Possible loan programs. They both have the following additional qualification requirements. No credit score option. Some first-time owners run into the possibility of not having any credit or a credit score at all. Home buyers who do not have a credit score have an alternative to provide information to the people who they are currently paying bills with to prove their creditworthiness. For example, you can use 12 months of consecutive on-time rent payments, as well as utility bill payments and car insurance payments to prove that you have a consistent history of paying bills on time. An additional income qualification flexibility is there are times when you will be able to use up to 30% of a qualifying income from another person in your household. Their income can count towards the total income calculation for these types of loan programs. You must show documentation that proves that the individual was paying rent to you, the primary borrower, over the last year. Current minimum requirements for FHA loans. The down payment requirement. When considering an FHA loan, there will be a requirement of a 3.5 minimum down payment from your own funds or gift. Please understand that while this loan type will accept a credit score of as low as 500, the down payment requirements jump to 10% with a credit score between 500 and 579. This is why, even though this is a great space and a great opportunity, if you have the ability to increase your credit score to 580, your down payment requirement would only be a 3.5%. Next, your mortgage insurance for this loan. With an FHA loan, they require two types of mortgage insurances. The upfront mortgage insurance premium is known as the UFMIP, and it is 1.75% of the loan balance due and can be rolled into your loan. You will also pay an annual mortgage insurance premium, or what is known as an MIP, as part of your monthly payment, and those costs can range anywhere from 0.45% to 1.5% of the loan amount. Now, you don't have to remember this or know these numbers. Just know that you can go to the beginning chapter of Chapter 1 and look over these numbers whenever you like. FHA mortgage insurance premiums are the same regardless of the credit score. So regardless of the credit score, the MIP insurance is going to be the same across the board. Credit score requirements for this type of loan. You can have a credit score as low as 500 with a 10% down payment. Homeowners making a 3.5% down payment will need a minimum credit score of 580. Employment. With the FHA loan, your income will be looked at based on your level of consistency in your earnings and employment over the last 2 years. Any length of time unemployed or moving from job to job will need to be explained to your lender. The income requirements or limits. There are no income limits for an FHA loan. However, there is a maximum amount of loan that you can get with an FHA loan, and the cap is $331,760. Anything over that amount, you would need to pay out of pocket or have another way to fund that amount. Debt to income ratio. The debt to income ratio for an FHA loan is 31% and the back end ratio is 43%. The front end ratio considers only your housing related costs such as your monthly mortgage, your payment, your property taxes, and your insurance. Your back end ratios look at your total numbers across the board, including your mortgage payments, car loans, credit card payments, and other reoccurring bills. So that means across the board, including your mortgage payment, your income cannot exceed, your bills cannot exceed 43% of your monthly income. Higher debt to ratios may be approved with strong credit scores or proof of extra cash reserves. Occupancy. The home must be your primary residence for at least the first year after purchasing it, regardless if it's a single family home or multiple unit property. Next are the current minimum requirements for a VA loan. Down payment. The first step is to get a certificate of eligibility to qualify for a VA loan, and you'll need a VA loan certificate of eligibility, which is a COE, and that verifies that you meet the military service requirements needed for a VA loan. Although most lenders can obtain a COE online, military personnel and veterans can apply for one online as well. The down payment requirement. There is no down payment that is required for a VA loan. However, lenders may require a down payment if the loan exceeds the standard loan limits. Down payments can come from your own funds or a gift from a relative, a close friend, employer, charity, or government agency. Mortgage insurance. Remember, the purpose of mortgage insurance is to ensure that the lender is insured in case of a default. With a VA loan, the VA guarantees loans made to the eligible borrowers. Because of this, there is no PMI required. There will be no PMI required for this. Now, there could be, and there usually is, a funding fee. A funding fee is charged on many VA loans to cover the cost of the program to taxpayers. The amount varies based on the type of service, how often the VA loan benefits have been used, and the down payment amount. Military borrowers with the service-related disabilities may be eligible for a waiver. In 2020, VA funding fees have increased by 0.15% for borrowers who put down 10% or less of the purchase price. Now this adds up to $1,500 in funding fees, and that is the cost for every $100,000 borrow. And remember, you don't have to remember these numbers. You can always go back to the PDF and look at the numbers, because you just want to know an estimate for how much money you want to save. And you want to know what these loan types are, so as people are talking to you about them, you can feel comfortable and you can feel confident. Next is your credit score. Now, there is no VA home loan credit score requirement, but the VA approved lenders typically require a 620 score. Employment. Generally, 2 years of employment needs to be verified, with some exceptions for recently discharged veterans. Income limits. There are no income limits or minimum income requirements to meet, but lenders require proof of steady income and the ability to repay the loan. The debt to income ratio. The debt to income ratio recommended is 41%. VA approved lenders may approve higher debt to income ratios if the borrower has enough residual income or extra money left over after tax deductions, expenses, and monthly maintenance costs are subtracted. The minimum amount needed varies based on your location and your family size. Next is occupation. VA loans are made only on homes. Occupancy. VA loans are made only on homes where the borrower is going to make the home a primary residence. The borrower must live in the home. Next are the current minimum requirements for a USDA loan. And one of the reasons why we have this ebook is so that you can educate yourself on all the possibilities. And one of the reasons why I like to bring up the USDA loan is because it is a space that allows you to have the opportunity to leave a legacy, a space where you can leave multiple acres of land for your family members to come. And a lot of people do not know about this type of loan, and so I would just like to share some information with you. So did you know that the United States Department of Agriculture offers mortgage programs that are designed to give low to moderate income families the option to buy a home in a rural area? Now, there are some restrictions on the location of the home as well as income limits. Some of the limits to consider. The location of the home. The home must be located within one of the USDA's designated rural areas to be eligible for the USDA loan. The down payment. No down payment is required for eligible USDA properties and buyers. Mortgage insurance. USDA loans do not require mortgage insurance. A guarantee fee. An upfront fee of 1% is charged for a USDA loan, along with an annual fee of 0.35% of the loan amount. These fees are similar to the mortgage insurance charged on an FHA loan, with the upfront fee typically being financed and the annual fee being rolled into a monthly mortgage payment. Credit score requirements. The USDA mortgage loans have a minimum credit score of 640 for automatic approval. This is as long as they meet the employment and income requirements. However, homeowners with lower credit scores may still be approved if a temporary hardship, such as an illness or loss of job, impacted their scores, or the new housing payment is less than what the borrower is currently paying right now. Income requirements. 2 years of job and income history is the normal for USDA loan. All household members' income must be considered regardless of whether or not they are applying for the loan. The USDA loans have income limits, which vary by city, county, and family size. Find out the income limit for your area by using the USDA map tool that's located inside of the ebook. Debt to income ratio. The maximum upfront ratio for USDA loan is 29%, while the 41% is the maximum back-end ratio. Keep in mind now that borrowers who have a higher debt to income ratio may still qualify with a credit score of 680 or above, and with a larger cash reserve and a stable income history. This is a wonderful option for families to be able to start to create a form of generational wealth. Next is occupancy. The USDA loans can be used for people who are looking to purchase their primary residence only. This has been the conclusion to Chapter 1, where the focus has been on the different types of loans that may be out there. Now, there are several different programs and there could be several other things available in your area. So always remember, the best way to determine your loan options is to get with a realtor. You can definitely get with myself and schedule an appointment with a lender so that we can schedule some time for them to go over where you are versus where you would like to be. Press play again so that you can listen to Chapter 2, and thank you for joining. Hello, and welcome back to Chapter 2. I am Octavia Harris, and today we're going to talk about a clear view of your budget. As a realtor, people come up to me and they want to know how they can tell when it is time and when they are ready to buy a home. Here are a few key spaces to check in on where you are financially. Number 1, kick all your debt to the curb and pile up your cash. First of all, you need to know when it's time to buy a home, and it has nothing to do with the calendar or the discovery of a great deal or home. You should be out of debt and fully funded emergency fund in the bank before you ever think about buying a home. Most people don't wait to have this foundation in place when they buy a home, which leads to some really tough times when they face unexpected expenses or a job loss. Set yourself up to win a nice down payment. That's number 2. Set yourself up to win with a nice down payment. You need to save up a down payment of at least 10%, but 20% is better since it will allow you to avoid private mortgage insurance payments like we talked about in the beginning of this book. Yes, you can still find mortgages that require a much smaller down payment, but if you can't afford a decent down payment, that's a clear sign it may not be quite time for you to buy just yet. And do not allow or let society or people or what you think is the right time to help you make this decision. You need to look at your finances and be financially secure in them before you make this decision, because the best part about it is once you make this decision, you will know how much it is going to cost you to live every month. And the freedom of knowing where you are is half the battle. Number 3, keep your budget conservative. And this is where even I have made mistakes. And now that you are feeling like you are in a place where you are financially stable, once you've gotten to that place where you know how much house you need because you've done the steps in the first chapter already, you've at least done some Google searches and you've checked in on how much house do you need. Are you needing a $75,000 house? Are you needing a $100,000 house? Are you needing a $150,000 house? Are you needing a $250,000 home? You want to know what and how much house you want, so you know how much down payment you need to save, so you know how long it's going to take you to save this down payment. Today, I'm asking you to stop guessing, to sit down and take 15 minutes and focus on these numbers so that you are in the know. The purpose of this book is to get you to grow your how to buy and sell your home muscles. Now that you're in a place where you are knowing how much your budget is, it's time for you to figure out how much home you can afford. And it's also time to make sure that you stay conservative and keep your payments no more than 25% of your take-home pay on a 15-year mortgage. 30 years if you must, but the goal would be to focus on a 15-year mortgage. Limiting your payment to 25% of your take-home means you'll have money left over in your budget for other goals, a life savings, for retirement, your children's college, for you or your spouse to return to college, or even for paying off your mortgage early. And don't forget, your new home comes with extra costs like lawn maintenance, roof replacement, repairs, and upkeep for your heating and cooling systems. And so you want to be prepared for that and not feel overwhelmed when things like that come up. Number 4, stay emotionally objective. This means don't let your emotions rule you. You've been extremely diligent and you are intentional to this point, and so keep your intentions focused. Now that it's time for you to get to a place where you're considering buying a home, you want to make sure that you stay smart. You want to stay smart because it's very easy to blow off your budget, and it's really easy to allow your emotions to take over and fall in love with a specific home or a specific neighborhood and get too caught up on what you think it's supposed to look like. Patience is the key, and if you don't find something that you love in the right price range, just wait. The right home will turn up at the right time. Hello, and welcome back to Chapter 3. I'm Octavia Harris, and this is a clear view of your credit. Now is the time to check your credit. And this is a space where you may need to take a moment, take a breath, and relax here. If you are a person who has had challenges with your credit, allowing someone to check your credit could cause you some overwhelm. And this is the part of the process that being mentally prepared for can help you adjust as you transition through each step of the process. If you haven't checked your credit report in the past year, you definitely want to take a look now. Every consumer can receive 3 free credit reports a year, one from each main credit reporting bureau on annualcreditreport.com. If you go to the PDF of this ebook, you can click on page 22 and it will direct you there. Make sure that all of the loans and accounts listed under your name actually belong to you and that the account balances are correct. It can take several months to have an error removed from your credit report, so the earlier you look, the more time you give yourself to fix the problem before you start applying for loan. To get started, focus on maximizing your credit score. Boosting your credit score can increase your chances of it being approved and help you land a lower interest on your loan, says Jonathan Smoke, who is the chief economist of Realtor.com. Consumers may have a hard time being approved for a loan if their credit score is below 625, Smoke says. In fact, what he suggests is that if your credit score is lower than 625, it puts you in a position where you probably only need to do a little bit of credit counseling. And so as a consumer with a credit score who is above 700, that person can qualify for lower interest rates, and best offers are available to people with a credit score of 750 and up, he says. You can lift your score by establishing several habits in the months leading up to the purchase, home experts say. The first thing to do is to take and make sure to pay your bills on time, since payment history is the number one factor that goes into a person's FICO score. Also, it helps bring down balances on your credit cards to get them below 30% of your available credit. Most people should also hold off on opening or closing any credit cards until after they purchase the home. Also consider that applying for a new credit card requires a credit check, which can ding your credit score. And closing a credit card can also lower your credit score by reducing your credit history, utilization, or making it seem like you're using a larger share of your total credit. Pay down your credit card balances and other debts. Welcome back to Chapter 4. This is Octavia Harris, and this chapter is focused on getting your documents in order and determining big numbers. Your documents. These are some of the documents that your lenders or other people could ask you for. Keep in mind to keep your documents safe and in a safe place, and be sure to get all your documents back if you have to give them to someone. Some of the documents will be pay stubs for the last 60 days, W-2s for the last 2 years, bank statements for the last 60 days, federal tax returns for the last 2 years, 1099 forms if you're self-employed or commissioned, documented dividends, stocks, earnings, and other sources of income, proof of bonus income, pension statements, security documents such as stocks, bonds, and life insurance policies, Social Security or disability income award letters if applicable, specific forms required by FHA, VA, or USDA approved lenders, gift letters if any portion of your down payment is coming from a donor gift. And these are just some of the documents. Keep in mind, you may need additional documents as well. Next, determine how much house you can afford. Use an estimated rate calculator to help you estimate how much house you can afford based on the percentage of your take-home pay from your loan that you are interested in. So that means you're going to have to go back to your math, figure out if you got a $100,000 home and that's what you are looking for, and you need to be able to put 20% down on that $100,000 home, then you are looking to make sure to have that down payment. And in addition to that, you want to know what that's going to be, what that's going to look like. And so there is a loan estimator that can help you figure that out. It is going to be on page 26. And you can click that link there to be able to get to that space. Next, figuring out your out-of-pocket needs. Let's start with savings. The first step to home ownership should ideally begin well before you purchase a home, and that is to save. There are several things that you may want to save for, including the down payment. In the past, homeowners needed to put down at least 20% of the purchase price to get a mortgage. Today, you may be able to buy a home with as little as 0 to 5% down. Although 100% financing can be extremely hard to find, it is possible. Remember, if your down payment is less than 20%, you may be required to purchase private mortgage insurance or get a second mortgage at a higher interest rate. Next, you want to think about your closing costs. Closing costs are fees required to obtain a mortgage and transfer ownership of the home, such as attorney's costs, an appraisal, title insurance, a recording fee, points, a loan origination fee. You may have to pay fees yourself, although sometimes the seller will pay them, or you can have them financed, included inside of your mortgage in some situations. Post-purchase reserve funds. This is an important one. Your post-purchase reserve funds. This is something you want to have prior to purchasing your house. And you may need to show the lender that you will have savings left over after you purchase the home. This provides assurance that the mortgage can be paid even if you experience cash flow problems. At least 3 months worth of mortgage payments is a good amount to have in reserve. Sometimes you may need extras. If you plan to buy a fixer-upper, or if you want to buy appliances or new furniture, include these costs inside of your savings plan. What things are important to remember? Avoid major purchases during this time. You must stop buying things that you want and focus only on purchasing the things that you need. To stay motivated, start looking at neighborhoods, visit open houses, and make a list of things that you would like in your home. Remember that unless it is an open house, you cannot necessarily see most homes that are on the market until you get a pre-approval letter from your lender. This has been the conclusion of the pre-home ownership checklist. I want to thank you for taking the time to listen to the things that you need to be prepared for. Remember that this portion of the book is a tool for you to get started on the work that needs to be done. You're definitely going to need to reach out to a realtor. You definitely need to reach out to a lender. Please reach out to me at octaviaharris.com anytime, and you can book an appointment and we can talk about where you are versus where you'd like to be. The goal is to get you educated and start the process now for where you'd like to be in your home buying space. Thank you so much, and if you're ready to get to the next chapter, go ahead and press play. Welcome back. This is the next step, and this is chapter 1 of the Buyer's Guide to the Steps to Consider when Buying Your Next Home. Here we're going to start by defining your real estate purchase project. Now, this first step is to define your real estate project precisely. It is essential to spend some time defining your needs, to ask yourself questions that define your why for purchasing. A necessary reflection that allows you to later target the real estate offers that better suit you and to be sure that they match your needs. The first thing to think about is always location, location, location. The location of your property is the first question to have. It is of great importance, and particularly concerning the price of the home. It is necessary to ask yourself if you want to live in the center of one of the beautiful cities in the Triad, or if you would like to live on the outskirts. What is important to you? What are your current means of transportation? What are your preferred school districts? What shops do you want to be close to? Or are you and your family interested in experiencing a serene outskirt where there are walking trails, lakes, and plenty of leaves? My clients especially enjoy these parts of the city because there are larger and newer accommodations in these areas where new homes are being built every single day. Being on the outskirts could also mean new schools, a different commute, switching grocery stores, which is something to think about. No matter where you are, you want to live, and you must ask yourself questions that make sure that you take advantages of settling in the city versus the boroughs. Are you ready to take your car whenever you want to shop or take your kids to school? You also have to look at the distance from your workplace. For example, are you really willing to travel an extra 15 to 20 minutes every day in order to get to a destination? What is more important to you, comfort or space? Ask yourself the real hard questions that allow you to really think about your home purchase. We want you to be prepared for this transition, and we want you to know that it may take several small steps to get you there. Remember, Confucius says that the man who moves a mountain begins by carrying away small stones. The next thing we want to focus on is the type of property. Another question to be answered is, what type of property do you want to acquire? Whether it is a condo, a house, or land, the process will not be the same for all, but it could be similar. To make this choice, consider the following. People moving towards an apartment or a condo should not be afraid of crowding, the possibility of hearing noise of neighbors, or the lack of outdoor space. In their thinking, they must consider the co-ownership drawbacks. The advantage of a house is also to benefit most often from an outdoor space, but what will it cost you? Will you have time to take care of it? A third option is to buy land and build. If you're building your own home to your liking, it can mean that you want it to be attractive and you want it to look exactly the way you want it to look. It should not be forgotten that it takes an average of 1 year to take on this project from scratch. Now, I do know of some options in the Triad area that can actually get you where you need to be in under 90 days as far as building a home, but they are in specific areas of town. So definitely get with me if you're interested in that type of thing as well. A project that can take a long time can be something that can be overwhelming. So you want to make sure that you have time prepared to do that. Their maintenance costs are higher, and the costs can quickly climb in these types of projects if you're not careful. And this is also why I use an alternative to my clients to help them get into a newly built home in under 100 days. I work with several different properties who offer brand new, affordable homes that you can customize to your liking. Next, you want to think about new or old. The choice must also be made on the new or the old home. When you think about the option of new or old, it must be considered that today, the highest number of new constructions are far from city centers and may not have the charm of old stones. New developments are not always easy to imagine what the project will look like when it's finished, but also the neighborhood. If there is new infrastructure, new shops, or city transportation coming, these are things that you may not definitely be aware of. From a financial point of view, the difference in the price can compensate by the assurance that during the first few years, you will not have to worry about major work to be done and any repairs. Make sure to establish your budget. You want to have a precise idea of your available budget, and it should be in alignment with how much you want to spend on real estate. This requires knowing your numbers monthly, what your payments are, and the amount of money that you can save directly without resorting to borrowing. It also may be wise to look at any financial help that you may need for this financial project. The next thing that you want to be aware of is your borrowing capacity. Before embarking on buying a piece of real estate, it is essential to know what is called your borrowing capacity. This term means the amount that a bank will be able to grant you. Now, it is calculated by taking into account the household resources such as wages, property income, financial investments, etc., and expenses such as your rent, insurance, telephone bills, transportation, etc. These are the numbers that we went over as far as the front end bills and the back end bills at the beginning of this ebook. The difference is the remainder to live, which is the amount that the households have every month after paying their bills. From one bank to another, the debt capacity granted may be different. In fact, online banks may give you an estimate that is too high, while your regular bank may not be so generous. It is possible to speak to several different institutions until you find out which one offers the essential loan you need. Next is personal contribution. The personal contribution is the amount of money that will make it possible to finance without borrowing. Having your own significant contribution can be a real plus for your financial profile. The idea is to make sure that you have around 20% of the total cost of your real estate property. To increase these options, it is possible to use family resources such as parents, friends, relatives can also decide to help. Parents can decide to help their children become homeowners through a living donation or even a family loan. There is a time to sit down with your family, finances, and the feelings to paint yourself a picture of what you want your future to look like. The future. As a rebel myself, it was hard to call one place home for me. I never called my hometown of Stanton, Virginia home. Because of this, the home was where I laid my head. And the thought of committing to one area for a long time used to intimidate me. My dreams were big, and I just didn't want to commit to something as big as a house note. And then I changed my mind and decided to move across the country a few years later. This is when I discovered some amazing statistics. The average person who purchases a first home only lives in it about 11.4 years, and 14.8 years for people who have purchased a home before. This eased my attention of being tied to a home or location, or what made it even better was the possibility of turning the home into an investment property later. Think about your future. What does it look like? Can you commit to the next 7 years in this home? Sometimes that's all the time a dreamer can give a place. And that's okay, because you can still buy a home. The next thing to think about is additional costs. In all of this thinking, we must not forget your additional costs. The price of the property is not the only amount paid. In calculating the necessary budget, take into account notary fees, the real estate agency fees, administration fees, closing costs, and inspections. The search for a condo or a home. When the project begins to be more precise and the budget has been determined, the research can begin. Again, it is essential to ask yourself several questions to increase your chances of finding the ideal property as quickly as possible. The different ways to find the property. To successfully find a home, there are many channels that exist. The first place that people generally go to is Google, Zillow, Trulia, or Realtor.com. And while these are the first places to go, these places can be the biggest disappointment. They are not updated regularly, not monitored, and most of the time it's mined data or information that isn't fact-checked, and it isn't always collected correctly. These things can make these places a melting pot for letdowns, misinformation, and missing out on property that you love. Next time, the simplest and oldest way to find something is through word of mouth. And if you're looking for a property in a neighborhood in which you maybe already reside in, do not hesitate to talk about it with your neighbors or the neighbors where you have friends. One of them may have heard of something. It can also be smart to drive around areas that you like most, and you may come across a sign that's for sale or a real estate agency window that's listing a property in that area. Also, think about word of mouth 2.0. Social media networks like Facebook, Instagram can definitely help you find accommodations. Since the house search can become so overwhelming with emails of inquiries, phone calls, lists, and favorites on every website, I suggest you find a way to keep all of that in a much more organized way. This is where it comes in handy to find yourself a great and experienced real estate professional. To book an appointment with me, you can always go to octaviaharris.com or octaviainspiresdreams.com and book an appointment with me, and we can definitely talk about your goals, dreams, and aspirations. If you are in the Triad, North Carolina area, I will be more than happy to serve you, and I'm also happy to refer you to people who may be in your area. Next, a real estate professional. To be sure not to miss the perfect home, I would put you on an email list campaign that will notify you when homes that match your interests come up on the market for sale. That means you get to know immediately the moment that real estate agent places that home for sale. You will be notified as soon as the property that corresponds to your desired area and your desired location and with the right price range is put on sale. Remember, as an experienced real estate professional, I would also be able to negotiate on your behalf, and this can give you a little wiggle room. Finally, it is also possible to find happiness at an auction. Even if this process is not necessarily usual, being interested in it can make it a possible good idea for yourself. Look at all your options and figure out which option works best for you. Next, the Buyer's Guide, Chapter 6, the next best steps to walking into your new home. Next, we're going to talk about the visits. When you first select the good homes that match your needs and they come up, the next step, you're going to have to get your agent to book showing times to see these homes. As an agent myself, I know how hard it is to coordinate and even get someone to answer the phone on a property. So having an agent makes scheduling a home to see as easy as 1, 2, 3. I generally like to show my clients a few homes at a time to give them things to think about and consider. Now, before your appointment, get prepared in advance by listing questions to ask the real estate agent or the owner. In addition to your own questions, here are some questions you may want to consider asking. What type of heating system does it have? If the electricity is up to standard. The number of co-owners. The amount of power to heat and gas bills. The accommodations. The number of outlets. The square footage. If significant work has been done and carried out, demolish portions of the home, change out of a toilet or space. Asking what the age of the roof is. The age of the water heater. The age of the HVAC unit. Reasons for small cracks. Observe any moisture stains. If there are planned development projects around the property, construction of new buildings next to it that can block a view or obstruct your view later. Things and items to observe. The common areas for purchases of condos or apartments. The condition of the ceilings, walls, and windows. The equipment in the property, such as the kitchen dishwasher, stove, bathroom, cabinets. the state of the electrical outlets, the ventilation, the state of the garden, if there are sick trees or if there are roots that are too deep and can damage the house. If the first visit is positive, it is advisable to make at least a second and even a third visit. The idea is that it is done at another time of day to check the noise level, the sunshine, the neighbors in the evening time. If a lot of work is necessary, this second visit should be done in the presence of a contractor. Thank you for joining us again. I'm Octavia Harris, and this is a Buyer's Guide, Chapter 7, The Time to Purchase. The time to purchase. The decision is made and it will be this property and your decision is final. Before you can finally settle into your new home, there is still one crucial step: buying. For everything to go well, it is best to respect all deadlines. Let's talk about some of the steps in the buying process. First up, the purchase offers. If the choice is made, it is necessary to make an offer or a purchase proposal to show your commitment to the seller. This is the price you are willing to pay to buy the property. The offer can be proposed or priced lower. This offer to purchase can take two forms. It can be oral or written, and written can include a text message or an email. To be considered official, this offer must contain certain things. The oral offer is a commitment which allows everyone, the seller or the buyer, to withdraw without giving any reason or conditions to be respected. And I'll say that again. The oral offer is a commitment which allows everyone, the seller, the buyer, to withdraw without giving any reason or conditions to be respected. The written proposal is much more engaging. It must include certain pieces of information such as the price, the duration of this offer, the type of property acquired, the identity of the two parties, the response methods, for example, by registered letter with acknowledgement of receipt, the withdrawal period, which is on average around a week. From the moment the seller accepts this proposal, the purchasing process is initiated. The seller is not required to take the first offer at a price. The most definitive commitment occurs when signing the sales agreement. Note, at the time of the offer to purchase, no amount of money is required to be paid. Next is the negotiation. It is always possible to make an offer to buy below the price. To make negotiations easy, have your real estate professional prepare your arguments to justify this price drop. For example, if there's a lot of work to be done, it is possible to request a quote from a contractor and then present to the sellers. Be careful. If the market is tight, for example, making an offer below the price can be risky. If several buyers are interested, the property may escape you because another person may have made an offer at a higher price. You must then make an offer to purchase with the desired amount. The seller is entitled to refuse it. He can also make a counteroffer with a new price. In this case, the buyer can decline the new offer to be released from any commitment. Thank you for coming back. I am Octavia Harris, and this is a Buyer's Guide, Chapter 8, Main Stages of the Purchase of a Home or Property. The stages to review and evaluate your budget. Many online simulators will allow you to calculate your repayment capacity based on your income, your charges, and your current debt ratio. When using these tools, set yourself a ceiling not to exceed your purchase. Do not forget that either the work to be done at home, if any, the cost to move. The cost to move can often be forgotten. Next, you want to find your property, right? To find your property, you have choices. Browse advertising sites, or if you're in the Triad area, you can contact me to help you save time and find the home you love. I am Octavia Harris. My personal phone number is 336-687-6908. My hours of operation are between 8 a.m. and 8 p.m. My email address is octaviainspires@gmail.com. My website is octaviainspiresdreams.com. You can also go to page 46 and download my app and click all of these links. You can follow me on Facebook on page 46 as well, and on Instagram. And you can also book your free consultation with me by clicking the link on that page. Picking a real estate agent can offer you a large number of accommodations. Like me, they know the local market well, and they can accurately assess the price. Moderating the exaggerated claims of sellers can be something that you really need your real estate agent to do for you, to make sure that people are not trying to oversell you on a home. Finally, professionals, they check the property placed on the market. They find matches specifically and especially for you. Checks that property title and helps with your home purchase during and after. Your realtor can also advise you on finding financing for your property. Remember, the next step is to put in that purchase offer and begin negotiations. And before you put in that offer, I recommend asking your agent for a sample of the offer to purchase and the contract documents so that you can get an understanding of the terms and conditions that you both are going to be agreeing upon. Your real estate agent will be responsible for handling negotiations and will ensure that you are getting the greatest value. Negotiating a deal can sometimes take several days or even longer until all parties are in agreement. So I advise exercising tremendous patience during this time. Be polite and courteous to your agent, the seller's agent, and the sellers. And remember that your agent has your best interest at heart. Once you are under the contract, here are the next steps. You call your real estate agent, and you may want to post on Facebook and call friends, but you need to solidify this first. Get your earnest money and your due diligence money to your realtor ASAP. Get your earnest money and your due diligence money to your real estate agent ASAP. This is the moment, the first moment, when you are going to move money and take that money to apply it to this home. Failure to do this could result in breach of contract, and this will also give you time for inspections. When you give your earnest money deposit or your due diligence, that money goes towards halting the process so that you can have time for an inspector to come out and check that house. This is the most important thing I feel you need to do because it covers you. You don't have to worry about the things that people tell you. You can focus on something that a professional can look for you. Number 3, send your documents into your lender ASAP. Your lender needs those documents immediately. Your most up-to-date check stubs, things like that we covered in documents. Make sure you get those documents to your lender ASAP. Number 4, set a closing date with your attorney. Number 5, set up your home inspections. Unless negotiated otherwise, the cost of these inspections will be your responsibility as the buyer. However, these inspections are crucial to ensure that there aren't any major defects with the home. It is also very important to schedule the home inspections before scheduling the home appraisal, which is different than the inspection, and obtaining mortgage pre-approval. Number 6, get your home appraised. Number 7, due diligence repairs request. Number 8, get home insurance. Number 9, turn on your utilities. Next, let's talk about getting your mortgage offer. During a first meeting with your lender, your financial advisor will study your profile, family situation, income, savings capacity, professional ability, seniority, outstanding loans, real estate, etc. Depending on your income, several advantageous loans can be granted to you. Please be ready to provide your financial institution or your lender state or national identification card, residence permits, proof of address, marriage information, divorce decrees if applicable, your last 3 tax returns, previous salary and income with W-2s, proofs of other income, savings, property income, leases, the last 3 bank statements, proof of other possible credit, title deeds if you already own additional real estate, a compromise or promise to sell. Once the bank has given its agreement in principle, it must still obtain a guarantee agreement, which ensures the payment of the mortgage in the default by the borrower. Next up is satisfying all contingencies. This is a big investment. Before you invest your hard-earned down payment on a property, know exactly what you're getting into. Schedule a home inspection, a pest inspection, and any other reviews of the property that may be necessary. These inspections will be your responsibility during the closing discussions unless otherwise negotiated. Next, secure your title insurance. When you buy a property, the previous owner conveys the title to you as evidence of your legal ownership. Occasionally, a hidden defect in the title or a mistake in a prior deed, will, or mortgage may have someone else as a legal claim against your property. If such a claim is made, title insurance saves you time and money by covering legal expenses and any claims that arise from issues before your ownership. Next, go to the pre-closing inspection. Are you having strong feelings about that island in the kitchen, the windows, or the basketball hoop attached to the garage? Don't skip this step. Walk through the home before your closing to make sure all fixtures are in place, unless otherwise negotiated. Check for any substantial damage from the seller's move out and make sure that any repairs were made that were discussed in your initial negotiations. If any problems come up during the home inspection that seller agreed to fix, the final walkthrough is your opportunity to ensure that this was repaired adequately. Here is a brief list of some items that should be checked during your final walkthrough. Other items may apply, so make sure to make your own list as well. Turning all the lights on and off. Run all sinks and check for leaks. Run all sinks and check for leaks at the same time. Test all appliances. Check the garage door openers. Open and close all doors and windows. Flush all toilets. Inspect the ceilings, walls, and floors for any signs of damage. Bring a flashlight. Run garbage disposals, dishwashers, and all exhaust fans. Do a radon test. Ask your real estate agent if there are any other recommendations for that area, and make sure to ask for additional advice if need be. Make sure to also bring the people who may have a final say in your home to this inspection as well. Next step in the process, close on your home. So you're here and you did it. Your dream home is all yours. Reach out to your agent for coupons, deals, and assistance with your move. Transfer all your utilities, move in, and get acquainted with the neighborhood. Next up, let's talk about the decision to sell your home. A Seller's Guide, Chapter 9, Making a Decision to Sell. Deciding to sell your property is not something that you do on a whim. This decision, although based entirely on personal motives, must also reflect your present and future needs adequately. The sales process varies in complexity from a seller to seller due to different factors, and each property, as well as various economic factors in the market. A house for sale. Ask yourself the right questions before deciding to sell. Is it a good time to sell my property? Given the situation of the real estate market, does the market give the advantages to the buyers right now? Will you be able to get the desired price under these conditions? What reasons motivate you to want to dispose of your property? You may have to sell your home because of a change of job, a need for more space for family, or closer to an urban community. The reasons are entirely personal, but must be weighed, and your plan must be well planned out before deciding to sell. If you decide to sell, then you will want to begin the process of selling your property. You will then have to ask yourself the essential questions. 1, do I want to figure this out alone or with a real estate broker? And 2, sell with a broker or sell it yourself. Selling a building is far from child's play. You have to think of everything to avoid the costly mistakes. The sale of the property requires a lot of technical knowledge on the part of the seller if he or she decides to sell his home based on himself. Sell yourself. If you decide to sell your property yourself, you may want to first Make sure that you have the time to devote to the project. Managing the sale of your property requires not only resources and energy, but a lot of time. The most significant advantage of selling yourself is to avoid having to pay the broker's commission, which often varies between 4 to 6% of the sale price. It is a lot of money, but the responsibilities inherent in the sale must be rewarded because it is a lot of responsibility. If you want to sell your property yourself, you will need to do several things. 1. Establish the right selling price for your property. 2. Highlight it and prepare it for pre-sale. 3. Launch advertising and campaigns and manage marketing. 4. Visit and speak with potential buyers. 5. Receive and analyze purchase offers. Next, you want to think about adapting your availability to that of your potential buyers. Being able to bear the stress of the phone that does not ring. Don't be in a hurry. Most sellers who decide to sell on their own are usually in no rush. They want to save several $1,000s on commission, but they generally have no reason to force them to sell their property quickly. This decision also implies that you are responsible for all of the staging of the project, including the legal documents relating to the promises to purchase and the counter proposals. In the absence of a real estate broker, you will also have to take care of everything that attracts publicity to publicize your building. If you want visitors and potential buyers, you need to put a minimum budget to increase the visibility of your property on the internet, as well as various other news media outlets. If you are comfortable with all of these aspects, you are in no rush and you have the time to deal with all the issues of selling a home, it may be appropriate to consider selling a home without a real estate broker. Next up is selling with a real estate broker. If you want a peace of mind and you have certainty that all of the operations of the sale will be carried out correctly, it is recommended to do business with a real estate broker or real estate agent. They are specially trained for this type of project and have the skills to sell your property without any problems. The primary function of these professionals is to act as the intermediary between you and two stakeholders, often a seller and a buyer, or an owner and a tenant. They therefore act as the facilitators and negotiators between the two parties. So, if you decide to contract the services of an agent, you are assured that by the Real Estate Brokerage Act that he or she will be responsible for all the rules and convictions established when selling your property. The main disadvantage of this choice is that you will have to pay a percentage of the commission, usually between about 4 to 6% of your property's sale price. Regardless of whether it is sold in a week or 6 months, nonetheless, if you decide to market with a broker, this will be the estimated cost. Next, here's a list of main advantages that you will benefit from working with a real estate professional. You are going to get the ability for them to assess the fair value of your property. They will receive calls, visit, and speak with all your customers. They will take care of the marketing, the advertising, and the promotion of building on various private channels, in particular Citrix, because it saves you time. Your real estate professional accompanies you through the sales process. They take you through all the legal documents, and they negotiate effectively for you to weigh in on the advantages and the disadvantages of certain homes. So you need to make an informed decision based on your needs, strengths, and weaknesses. This is one of the best things that a real estate agent can help you with. If you have time and you are in no hurry, and you have the skills to publicize your building and manage legal documents, selling by yourself can be an attractive alternative. Nonetheless, if you know full well that your schedule is busy and that you're not the right person for sales and that you do not know where to start to market your property, it can be the right decision to call in a real estate professional. The broker undeniably has the necessary tools to ensure that you don't have to worry. To analyze the advantages and the disadvantages of each option, and to make a decision that will allow you to sell your home effectively. Once you find the correct broker, one of the first things that you're going to do is signing the brokerage contract. If you choose to sell with the help of a real estate broker, you will have to sign a brokerage contract. It is a contract that establishes a professional link between you and your real estate professional to create obligations of both parties for a limited period. There are several types of brokerage contracts. There are two main types, and here are the first two. Exclusive brokerage contract. This type of contract obliges the seller to do the business only with the broker designated in the agreement and prevents him from using services for any other intermediary to sell his property. This type of contract that brokers generally prefer because it guarantees them compensation at the time of the purchase of the home. On the other hand, this assures the seller that the broker will devote maximum time and effort to the property since he is the only one in charge. Next is the non-exclusive brokerage contract. This type of contract allows the seller to sell his property himself or through another intermediary than the broker designated in the agreement. It is a contract that may seem advantageous for the seller. With this type of contract, the broker can still ask for a higher percentage of compensation in the event of the sale, or even not put as much effort into the sale of the property, since nothing guarantees him retribution at the end. So you have to put all your cards on the table when negotiating this type of contract to be transparent. Above all, you should not see the broker as a competitor or even as an enemy, but rather as a partner and an associate. Therefore, you must choose between these two types of brokerage contracts when you negotiate with your broker. First, consider your goals and your needs and the level of involvement you want to play in the sales process. When you have made your decision, you will have to write the contract. Content that must be included inside of the brokerage contract. Most of the time, brokers have the contracts for you all ready to go. The brokerage contract must include the following sections: identification of the parties. The persons initiating the contract must be identified in the first section of the agreement. House-related documents, the name and the address of the broker, the realtor's name and their certification number, the names and the contact details of the sellers, owners, and the building. It is important to note that if you are two people who are full owners of the building, you cannot sign the brokerage contract without each person's approval and presence. Description of the building for sale. The building designated in the contract must be subject to an accurate description of all its components, both inland and structure. You must therefore provide the agent with all the information you hold related to your property. Here are a few examples of the things you may need: certificate of location, size and area of the land, the general condition of the property, tax amount, recent renovations, room size, living area, any other important information relating to the state of the property. You must also submit the act of acquisition that you have contracted, as well as a certificate of location on your property. The license of the site will also be required by signing the deed of sale. The contract must also include the address of the property. If the building is a co-ownership, it is necessary to specify whether we are talking about a divided or an undivided property and to include it in the contract. In this case, it should also include the following information: the number of parking lots included, the number of storage spaces included, a copy of the declaration of co-ownership, and a copy of building regulations. Next, we want to focus on the selling price. Determining the sale price of your property is crucial in your sales strategy. To determine the realistic rate at which you can expect to sell your property, you should be able to do a brief analysis of comparable properties that have been sold in the market recently. Your broker, through his training and experience, can then be beneficial to you, and they can give you an idea of the real value of your property by doing this comparative market analysis. They will carry out a simplified analysis of the comparable method and the present sales of comparable buildings in the same area that you live in. However, it can be up to you to target the sales price, taking into account the advantage and the value predicted by your real estate agent. However, it will be easier for you to determine a fair, realistic, and competitive price. At this stage, you will need to help your broker by targeting your property's strengths and weaknesses. Either the exterior layout, recent renovations, a renovated kitchen, a finished basement, a possibility of enlargement, or any other concerns you may see. So what we are saying is you will need to sell your property to your seller before they can sell it to an interested buyer. You are the owner, so you know the property best. You are the owner, so you know the property best. You should also be able to identify the strengths in the area in which the property fits. Are you by nearby parks? Are there schools nearby? What's close by? You understand your home, so make sure your broker understands as well. Please know, never ever target a selling price that is too high compared to the market value established by your broker or by market analysis. By doing so, you can repel potential buyers, burn your property, or significantly extend the sales duration. It is never a good idea or a good sign, at least from a buyer's perspective, that a property stays on the market too long. If the owner wishes to change the sale price during the contract, he must then fill out a form to this effect entitled Modifications and a Notice of Fulfillment of Conditions. If you are working with me and you make a decision to price your house higher than the market value suggests, we will go ahead and create one of these modification notices at the time that we sign the contract. Welcome back to Chapter 10, When Problems Arise. This is going to be a list of inclusions and exclusions. Oftentimes, disputes arise between the seller and the buyer because not enough details have been included inside of the contract. Therefore, the seller needs to draw up an exhaustive and detailed list of all of the appliances, lights, and objects included in the sale of the property and those that will be excluded. To avoid any confusion, you can even go as far as to specify serial numbers of each device and a brief description. Here's a list of examples that you can pay attention to when making your list. The air conditioner, curtains, rods, and blinds, the washer, dryer, dishwasher, water heater, and the water pump. Also, another note to remember is mortgage repayment fees. If the buyer decides to acquire your property and they take on a new mortgage instead of assuming your old one, which most of the time people cannot assume your old mortgage, you will need to pay off your mortgage and write it off of your expenses. And you may have to pay a repayment penalty. So make sure to reach out to your loan and check into what your penalty cost could be. Next, signing the bill of sale and taking possession. The date your buyer takes possession of the building and the time they are required to sign the deed of sale. These two dates must be designated in the brokerage contract. The buyer's offer to purchase may offer different times to establish in the agreement as well. Welcome back. I'm Octavia Harris, and this is Chapter 11, Relationships with Your Broker. This is where you can negotiate, enter the seller's percentage, or the amount of commission and the terms inside of the agreement. Now, this information must be written in a contract, and the amount of the commission will ultimately be paid on the sale of the building. The seller's declaration. The seller's declaration is a document in which the seller reports any situations, problems, or elements that have arisen during his possession of the building or which he is aware and which could possibly reduce the value of the property. Generally, the seller must therefore answer a series of questions on various subjects about the property, and here are some examples that you may find in the seller's declaration that you would need to answer. Has the property experienced water filtration problems or had any foundation issues? To your knowledge, could you specify any characteristic of the building that could become uninsurable or significantly increase the premium? Have you changed the electrical panel since the date of the acquisition? Have you ever had any rodent problems? These are just to name a few things. Now, this document will, in particular, establish that you are the full owner of the building and that it is free from all charges or fees. In the event that any questions about the terms of the property or the rights of the property come up, you must immediately notify your broker. Next, the obligation of the seller. This section is about the brokerage contract, which establishes all the obligations to which the seller must fulfill. This document is going to notify buyers and let them know what is included in the property. It'll also notify the public and make the public aware that the property is available for sale and allow access to the property for visits. Next, the obligations of the broker. In this section of the contract, it is essential for the seller because they are who is trusting the broker to sell the property and to get them their money back on their capital investment. This is why a broker, specifically your broker, has to be knowledgeable to give the seller the due diligence that they deserve. And these due diligences that a broker should give you include but are not limited to information, loyalty, publicity, conflicts of interest, and several things in between. Please take your time and read this section of your contract carefully to be aware of any obligations that your real estate professional may have. Next, the signature of the brokerage contract. Before signing your brokerage contract, please read it carefully to understand each element that is contained in it fully. Do not hesitate to ask your broker questions if you do not understand specific points. Next, the description sheet. Using the information that you have provided, your broker will create a description of your property, which will be used to market to target customers and interested persons. At this time, you must make sure that all the information contained in it is exact and has no errors that have crept in. If you discover an error on this form compared to the information provided in the brokerage contract, the broker should correct this error and then send you a new copy subject to your approval. Next, signing and entering into the force of a contract. Now it's time to sign the contract. For the contract to take effect and become able to be enforced, you have to have your double agreement signed by you and your broker who represents you. Drafting of the brokerage contract is an essential step that should not be taken lightly. Once the deal comes into effect, the broker is in charge of your building, and it is at this time that you need to start developing your property. Welcome back. I am Octavia Harris, and this is Chapter 12, the property development. Development of the property. Selling your property is a game of seduction. Your potential buyers must be charmed by the different attributes of your property, and to achieve this, attention must be made to the smallest of details. At this stage, it is then a question of optimizing the appearance of your property is going to take place. Now, we are not talking about undertaking major renovations here. Far from it. It's a bit like before a date, you don't get plastic surgery, but you take the time to shower, prepare, and take care of your appearance. It is precisely the same thing as you are going to do with your property. You do not need to redo everything, but you must target the areas for improvement and put forward a creative wow factor that will capture the attention of the buyer. A real estate professional or broker can significantly help you target these factors since he realizes or she realizes dozens of properties have been under their control and they see dozens of properties week to week. They also know that the trends that are happening in the moment. Here are a few things to keep you in mind when developing your property. Monetize the house. The painting. It may seem trivial, but painting is one of the trios and the most profitable renovations when you sell. With a return on the investment or the capital of 50 to 100%, painting can restore a youthful and trendy appearance to an almost inept property. If your property is recent, a few touch-ups are enough to erase traces of wear caused by the passage of time. You will see it as it is, an inexpensive investment that's simply worth it. Next up, decorations. A point often very much underestimated. The decoration and the style inside of a property very often drastically affects the perception of the potential buyers. Not everyone can imagine a house in a new light, and you may need to target what 80% of buyers like about the style and adapt your property accordingly. Now, we are not talking about redoing all of the interior decorations of the property by far, but rather to include a modern, trendy element before capturing the attention of the buyers. If you are dealing with a broker, they can help you a lot in this area. There are also various companies who specialize in home staging that can help give you a boost. And my company also has a few insightful people that we can come out and bring out to your property to help give you some great ideas. Next, the landscaping. The buyers will judge your property before they ever step out of their vehicle. The exterior image that your building projects is not going to be taken lightly. They are considering when other people pull up into their prospective home, what they will see and how they will be viewed. You never get a second chance to make an excellent first impression. This is also true in real estate. Before marketing your building, make sure that the landscaping is adequate, that the exterior coating has no visible signs of wear, or that the flower beds are not lined with dead flowers. Buyers must be impressed as soon as they set foot on the street outside of your property. The dollars you invest here will be well spent. The next thing to think about, housework. Do not forget to clean up before the visits of your potential buyers. They will, whether it be involuntary or not, judge the quality of the household maintenance, and it will impact their perception of the general upkeep of the property. Do not allow them to have the wrong impression about your property. Even if it's tedious and you have to do the cleaning every time, remember this is something that you can do for free that makes a huge impact on the sale. Next, and the most important in my personal opinion, probably because it's my favorite space in the house, but a modern kitchen. Buyers buy with all their senses, not just their eyes. Specific strategies, as seen in particular programs, can then be used during the visit with specific potential customers who are very interested. Give them an experience, not just a tour. Odor can be just as important as a visual factor. For example, a good sense is to prepare cookies, which is something that I do for every open house. Put them at the kitchen table. Even if it sounds cliche, if you are dealing with a broker and they advise you and tell you the dates of the home visits, please coordinate your efforts. Or if you have an amazing broker like myself, you don't have to worry about that because I am going to make sure that there are fresh baked cookies in the oven every time we have an open house. The bottom line is that you must enhance your property to bring out its exceptional attributes by signing the brokerage contract, marketing, and getting prepared for visits. You must also correct any small defects that are apparent and can quickly be annoying to the buyer. Once your property is optimized, you or your broker can then proceed to start marketing, creating visits, and staging open houses. Thank you for coming back. I'm Octavia Harris, and this is Chapter 13. Next up is marketing. Once your brokerage contract is signed, or you have made the decision to sell yourself, the property has been well developed, it is now time to move on to marketing and visits. Now at this point, the person responsible for selling the building, you or your broker, must market the property to see as many potential buyers as possible. Various marketing strategies can then be used to achieve this. Brokers often have very long contact lists and a variety of distribution channels. When you act alone, you can be imaginative and resourceful. Here are some primary means of advertising that can be used to promote your property on various media sites. Next, let's talk about the description sheets. Whether you do business with a broker or not, your property's description sheet will always be the focal point of your marketing strategy. The description sheet provides all the information concerning your building to potential buyers, such as surface area, age of the building, number of bedrooms, number of bathrooms, yard space, and different things like that. No one can do anything without a complete and detailed description sheet. This sheet can then be printed and distributed or published on various media sites by the buyers. Although some people do not find it necessary, I have found that a well-structured and aesthetic description sheet tends to put readers at ease who find it easier to find their way in the form of written details. The first step in marketing strategy should be to create a fact sheet for your property. If you're dealing with a broker, you should already have provided all the information to your broker so that they can deal with this section. You will only have to validate it and make sure it's correct. Brokers presenting your home. The second essential thing that every seller cannot do without is a photo bank of the property. And we're not talking about 2 or 3 blurry photos here, but rather a good dozen quality photos that will make your potential buyers want to come and explore your property immediately. You see, photos play a significant role in your marketing strategy since they allow you to see the park from all the angles and give an excellent overview of its potential. Do not make the mistake of taking the photos yourself if you do not have a good camera or you have no photography experience. Professional photographer services often cost less than $100 and are worth their weight in gold. If there's one place that you shouldn't cut, it's here. Blurry, poorly framed, and amateur photos can make buyers feel that you are not serious about selling or that you have something to hide. Don't waste your time and do business with a photographer who is a professional who can help you sell your property by starting the marketing off correctly. A promotional video is a powerful advertising tool that can bring your home to life. Generally, video promotions are used for high-end homes. However, I actually recommend it for all homes, and this type of product provides an aerial view as well as a better understanding of the layout of the rooms inside of the property. Background music and key phrases generally allow the buyer to have a first experience even before stepping foot onto your property. It is a tool that can allow you to be differentiated between yourself and the next competitor, and it can pique the curiosity of many people on the web. Some brokers, although few, specialize in this type of service. However, some private companies explicitly meet this need and will make you a video for just a few $100s. Let's talk about your marketing strategies next. Once your advertising tools have been created, you will then have to distribute them on various social media platforms to reach your customers and your clientele. At this point, your marketing strategies will be influenced by your initial choices, either to sell alone or to sell with a broker. So, advertising for your property alone. If you decide to sell your property alone, This includes that you will also have to deal with everything relating to marketing and advertising. You can use things like small advertising sites. Classified ad sites are becoming more and more popular for selling properties. These generate massive traffic and thousands of people visit these sites every day. Posting an ad on these sites is free unless you want to pay a specific option to increase your visibility. You may want to think about increasing your visibility because on free sites you have to consider that you would be more of a first come, first serve, so they'd have the opportunity to see houses that are advertising and paying a fee for it. So consider that possibility into your budget. Next, the power of social media. The power of social media has proven itself time and time again. If you have an active account on Facebook, Instagram, or any other various social media networks, use this as an advertising channel. Create sales announcements that your friends, family, and loved ones can share with their acquaintances. Who knows? Maybe someone you know or someone you know who knows someone who is just looking for a property that looks just like yours. It doesn't cost a penny, and it can be an easy, free strategy for you to use. Next up, newspapers. The excellent old traditional method has proven itself, and although fewer young people consult the newspaper regularly on properties for sale, the fact remains that more past customers are still hooked on this type of media. And now newspapers have gone digital, so you can still post in the newspaper on the internet. It's inexpensive, and you may be able to reach customers who are not familiar with internet media if you use the regular newspaper as well. Advertising your property with a broker. If you're dealing with a real estate broker, he will be responsible for the advertising and the marketing. The advertising and the marketing generally has to be done in a wide range of networks, and your real estate agent generally has access to that wide range of networks to display your property online. Here are a few ways that your broker will use to advertise and publicize your property. The number one space is going to be Citrix. The most significant marketing benefit that you will get as a seller if you do business with a real estate broker is that your property will be listed on Citrix. Citrix is one of the most widely visited sites for sale and purchases of property. Your building will therefore be seen by a vast number of buyers very quickly, very fast. You will find then that the descriptive sheet of your building as well as the photo directory of your property will be listed there in Citrix. A marketing strategy can absolutely be beneficial. So, in addition to their access to Citrix network, brokers are generally a part of a real estate agency and publish the buildings for which they are all responsible for on their websites, on social media, on their main social media pages, and share them with other realtors as well. Again, these sites are famous and popular with buyers, significantly increasing your visibility and chances of finding someone interested. One of the biggest websites that it connects to is Realtor.com. And on Realtor.com, you get the opportunity for your agent to not just upload to Citrix, but Citrix will automatically upload your posting to all of the biggest main websites that people all over the United States use to find and buy a home. Next, social media. In addition to their websites and agencies and brokers, they usually have a very active social media network and can be seen by a large potential amount of clientele. They will make you benefit from their visibility by posting advertisements of your property onto their social media pages. This is something that is a key and essential to helping you sell your home. Plus, the next thing that your realtor should have and does have is a list of potential customers. Brokers also have a reasonable, extensive buyer directory. They have clients who are just looking for properties and have contacts that can sometimes significantly speed up the sales process. Going through a real estate professional is sometimes the best way because it takes the headache out of your job. Welcome back. I'm Octavia Harris, and this is Chapter 14, The Hunt. Next up, we're going to talk about the visits. When buyers express interest and want to come and visit your property, you will have to do everything not to give them the wrong impression. If you are selling your home alone, there is a specific rule that you need to follow to make sure that you don't miss it and make great, horrible impressions on your buyer. You must, therefore, look professional, be dressed, be polite and courteous, describe the property with some photos and a printout so that the buyers can take the printout home with them. Be able to answer all questions. Leave your full contact details. And make sure to leave the broker's list description. If you respect these points, you should make your visits a success. And if you're dealing with a broker instead, you also don't have to worry about any of these things because they will be the one who does all of this work. The only thing to pay attention to is the tour schedule. It is essential that you coordinate with your broker's program to plan the visits of your potential buyer's property. You should also do a quick cleaning before each visit to ensure that your property looks the best. The visit staging is essential in the sale process because it is here that the buyers will often decide whether or not to buy your property. Everything will depend on their first impression and the criteria they set for themselves. The smallest detail can make a person change their mind, and the quality of the seller's service can make the difference as well. During these visits, a person will come forward and file a promise to purchase, and that is when it is time to take the very next step. You have made it to a place where we are close to the end. Welcome back to Chapter 15. I'm Octavia Harris, and this is the negotiations. You have finally received a receipt of a promise to purchase. The receipt of promise to purchase is an important part of this process. You have just received your promise to purchase from an interested buyer. Great! Now, what do you do? It's a good question. The obligation to buy is, in fact, an actual and legal document that binds two parties. It is also called a buy-sell agreement. This must be drafted carefully since the omission of a single point can become problematic. This document is written by the buyer, who will then send it to you or your broker. When you receive a promise to purchase, you will have a specific time to accept or refuse. But above all, let's see what it contains. The content of this promise to purchase. The promise to purchase must contain a wealth of information. This must mention the following points and include a whole lot more. Please go over these documents carefully. It includes your name, the name of the buyer, and the address of the property, the purchase price offered, the amount of the deposit, the elements that the buyer wishes to include in the purchase, the closing date, the date to which the buyer wants to take possession of the property, a request for a certificate of location of the property, the expiration date of the purchase offer, any other condition. For example, to satisfy the buyer for following the inspection or following the approval of financing. There could be multiple other conditions that are required and need to be looked at and read thoroughly and understood. The content of this promise to purchase must be carefully checked, since most of the information to be included is mandatory information. When you have been given a promise to purchase, you will have to decide to accept, refuse, or even make a counteroffer. Most sellers do not systematically refuse the offers they receive, but instead sends a counteroffer to the buyer to demonstrate that you can have an interest in them, but you still may refuse his present offer. This will take the next step that you need, which will be negotiations. Counter proposals, counter negotiations. Have you received a promise to purchase and you start to find that the price offered by the buyer is too low? You can then make a counter proposal and start a negotiation process. The sending of a counter proposal has the effect of signaling your refusal and concerning the promise just presented. This means that this is a notice of denial accompanied by a counter proposal that you would find acceptable and that the buyer should consider. Elements of the negotiation. This counter proposal may be related to the sale price, inclusions, or even the date of taking possession. It can also make a modification or a clarification on the offer presented simply. Each counter proposal has the effect of canceling the previous one. Make sure that during your negotiations, your modifications are cumulative, and you do not forget anything from one counter proposal to another if you happen to have several counter proposals on the table. The counter proposal must include the conditions of acceptance, which stipulate the time allowed for the approval and the notification to the seller. During the specified counter proposal, the seller cannot withdraw his offer under any conditions. Once deposited, it can no longer be removed. Finally, you and your buyer will negotiate and agree on the terms of the sale. You will then have signed a promise to purchase according to the new conditions established, and when this is done, you will proceed to the next step, which is a transfer of ownership. Hello and welcome back. I'm Octavia Harris, and this is Chapter 16, Finalizing the Deal. A transfer of ownership is the start to finalizing your deal. And now that you have found a buyer, all you have to do is formalize things. To do this, you must go to a notary to transfer your property. At this stage, the notary will examine the title deeds and prepare the deed of sale. At this stage, if you're dealing with a broker, he plays a vital role by acting as the partner to guide you through various documents that need to be completed and answers that need to be, and questions that need to have answers. Next up is title review. The title examination validates the historical chain of property titles to confirm that you are indeed the only person to hold property rights in the property that you are selling. Also at this stage, we will verify that the land dimensions are exact, that the property respects the zoning, and that it has been built in the location indicated on the site certificate. The notary will also check if the property is encumbered with easements, has any rights of way, or even if it has encroachments from the neighboring lands, meaning possibly something that is on the land that shouldn't be. The last step in this sales process is the drafting of the Act of Sale. This document has an effect of formalizing the purchase of the property by the identified buyers, as well as specifying any clauses or conditions that are essential to protecting the rights of both parties. Once the buyer and the seller have signed the Act of Sale, all that remains to do is to register the new property rights. Registering the property rights, the notary, having witnessed the transaction via the deed of sale, must register it with the registry office. Until this step has been done, the seller may retain the funds paid to him. Receive your money needed from your notary. He will pay you the amount indicated once the transaction is concluded to finalize the deed of sale. Once you have received your payment, you will also have to pay the broker who has represented you. And if this is the case, your sales partner should definitely be rewarded for their hard work. At this point, you can calculate the net profit from your sale. Satisfaction with the work accomplished. The net profit represents the amount that will go directly into your pocket following the sale of the property. We deduct from the sale price all the costs related to the sale of the home. Once the money for purchase has been pocketed, you have completed the process of selling your property. You can now move on to your next project with a peace of mind. And who knows, maybe you're ready to start buying a new property at this time. Either way, I want to thank you for taking the time to listen to this ebook. It may cover a lot of different aspects of buying, selling, and getting prepared to buy a home, but there may be some things that it does not cover, and there may be some things that you may not understand. When I first started in real estate, I promise you, it was like learning a foreign language. And over the course of the past few months, my clients have felt the same way. And what I wanted to do in creating this ebook was to bridge the gap between where you are in real estate and where you'd like to be. I hope that this ebook has helped you get there. If you have any questions, please book an appointment at octaviaharris.com or at octaviainspiresdreams.com, and I'll be happy to walk you through anything and any questions that I can answer for you. And if I can't, I have a team of over 100 years of realtors on my team who can help answer any questions as well. It's been an honor to serve you in this way, and I look forward to the continued journey. Have a great and magical day.